So trading tip of the week is just on technical analysis. You know, uh, it's more of a warning than everything. You know, I've been mentioning this like for you guys for the last weeks and in my newsletter for absolutely ages. That when you're looking at charts and all that, and you're trying to put in solid lines of support and all that, if it's not genuine, if it's not solid, don't make it up. It's going to cost you money. So, sometimes I struggle to find a support line or a resistance line, and I would rather leave it blank than to put something in that is not a solid line, not a genuine line, because I don't want to be trading at those types of levels because generally they're not going to work. So you've got to be able to identify them. And obviously with the pound and the euro keep making these fresh lows, it's very hard to get support lines sometimes, but it's telling you something. Be careful about buying it. As I say, I've been warning about that. So just be careful with these markets. They're very, not dangerous at the moment, but they're very bearish, the majority of them, apart from the dollar, of course. So just be aware of that. Just be very selective with those trades. Okay, so now we're on to the second part, which is our technical analysis. Just a reminder, so black numbers in the right hand are support resistance levels, or you may find one or two just for the closing prices of the week. Brown numbers are breakout levels. We're not seeing too many of them on the upside at the moment, that's for sure. And the claret numbers are just horizontal, where I've either identified a bit of support or resistance, or I've managed to find double or triple tops or bottoms. I have got some Fibonacci in this week, so just be aware of that and what those levels are. And because they are coming a bit more into play, especially with the stocks. Okay, so obviously stocks were trading lower during the week, especially towards the end of the week. And that's just, in my mind, just central banks hiking rates, talks of recession. Companies are performing well, but a lot of them at the moment, because obviously their profit margins are up. They're the highest they've been for decades, over 15%. And some of them probably at the moment are getting even more than that, just because raw materials have come down, power's come down, but you haven't seen those prices in the shop come down yet. And of course, as the buying backs away, as the recession starts to bite, then companies are going to be forced to drop those prices down. Okay, so with the Dow Jones, on this one, all I've simply put is just the Fibonacci. And, it just helps that, when we look back, it's sort of just left of middle. You can see that sell-off that happened around about March 2020 when COVID first hit. We had that amazing rally up with all that quantitative easing that was being done by the central banks. And then, of course, as that stopped and reversed, you're seeing the market lower and lower. We are still getting some of those peaks. It's not all one way, but for me, the peaks have been an opportunity to sell rather than the dips, an opportunity to buy. But just be careful, because I'm a natural bear trader anyway, so these markets really suit me. Okay, so let's move on to the next one, which is the 30-minute. And on there, I've managed to find resistance at 29,961 and 29,880, with support at 29,287. It's still a down channel, not deep, and of course where it's closed is in the middle of that channel from what I can see at the moment. So just moving on to the S&P. So there's the daily again. So I've managed to find a resistance level at 3,900, which is obviously away from the market at the moment. Support I've got at 36.36 and 35.43. There's another one, but it's much further down, and if it gets there, we're really in trouble. So I hope it doesn't. Okay, so again, I've added an extra slide here. So this is the S&P with the Fibonacci's on. As you can see, we're through the first level, the 382, We haven't got to the 50 level yet, and certainly nowhere near the golden ratio, but they are coming a bit more into play, which is why I've put them on. So just, be aware of them, and just make a note of them, and just, that they don't really move each day because they're set from the lowest point to the highest point. And that's an important thing because, when you're doing the analysis, it's only where I put that vertical blue line in, it's you can only analyze the data to the right hand side. I'm always mindful of what happens on the left hand side, but when you're looking at those particular Fibonacci levels, it's much more important to be looking on the right hand side after it's peaked there to what's going on to help you with those levels. And of course, always remember, if a support level is broken, it effectively becomes resistance. If a resistance level is broken, it effectively becomes a support. For me, I always wait until that candle closes, whether it's a daily or a 30-minute or whatever, because I want that confirmation. Because you sometimes you get these false breakouts, and you need to be careful with them. And moving on to the 30-minute. So here we are. On the 30-minute, I've managed to find some resistance at 37.26 and 37.16 and support at 36.53. Nasdaq, so on the daily, again, stocks just full of stocks at the moment, so it's just some move a bit faster than the others. So on the daily, I've got resistance way above the market at 13.245, and then 12.896 and 12.200. Support at 11.388 and 10.653. On the 30-minute, I've got resistance at 11.598 and at 11.398, which is very close to the support on the daily. And then below that, 11.200 for the support on the 30-minute. So, some of these levels are definitely going to break each other. Moving on to the Russell, which are the small and mid-cap companies. So on the daily, 1880 resistance and 1788. Support at 1687, 1524 and 1449, which are obviously quite some way away. But they're always ones just to jot down because they could come into play later on, and they're not going to change. And then moving on to the third, there we've got close to the resistance level on that one of that downtrend line there at 1689, which again is very close to the support on the daily that I mentioned just now. And then the other support on that downtrend is 1657. Now, moving on to currencies, with dollar strength and what's been going on in the UK and sort of in Europe, really, with all these high energy prices, power prices, food prices, inflation in general, it's had a massive impact on us. And as we're seeing, regardless that the fact that we may sort of be turning the corner a little, currencies are really still under pressure. And so for that, I've had to move to a monthly chart, not a daily, so you could appreciate this. And on that, I have managed to find, the resistance is way up, it's at 120. But support I found was at 109.75. But, I expect that to be broken immediately. Well, obviously, unless there's a bounce over sort of pretty much sentiment of the weekend. And then when we move on to the 30, forget the one way up there, but we can look at sort of 108.84 as a resistance. So as I say, on the on the monthly, it's above that. And on the support on the downside, 1.0840. So these levels have not been seen for decades. And so again, you know, this comes back to, if you can't see a level, if you can't find a support line, don't try and add one. But you know, I've managed to find what I think are reasonable ones there, which is why I have. Now, moving on to the euro against the dollar. And here, you know, obviously the euro remains under pressure as well. And again, I've had to go back to the monthly. Now, this monthly goes back to the actual inception of the euro as a tangible currency, a fiat currency, back in 2001. And you can see these sort of levels have not been seen since then, you know, on that big move on the upside. And again, it just brings it home to you on sort of how much pressure there is on the euro and the pound, and how much strength there is in the dollar still. So on here, I've got resistance at 1.0355 and support at 0.9585. On the 30-minute, I've got resistance at 0.9913 and 0.9850 with support at 0.9721. You know, again, just be a little bit cautious. You know, I said earlier that I expect maybe there's going to be a little bit of profit taking coming in, because, you know, they really did have a push towards the end of the week. But, you know, it's justifiable when you see the you know, the aggressive rate increases coming from the US and the strength of their economy versus the rest. So moving on to Bitcoin, which, you know, I was surprised. I think it had sort of quite a good week, really. And, you know, resistance 23,280, support just over 18,000 at 18,036. So yeah, for me, it's holding in quite well now. You know, I think a lot of the panic selling, or the you know, the really people that needed to liquidate their crypto to release capital just to even pay their bills and such like, has probably sort of finished for the moment. I'm not saying it's finished completely. And moving on to the 30-minute, I've got resistance at 19,495 and also 18,897 with support at 18,563. Now, I always like to add in this one, and usually they're very loosely correlated, but as you can see, you know, this past week hasn't been so closely correlated. The stocks have been coming off much faster than Bitcoin. And you know, just keep an eye on that. You know, I'm not saying it's one to trade, but it does sort of give you just a little bit of insight. So, you know, for me at the moment, that correlation has become much looser than it actually ever was. Moving on to gold. Again, you know, during the week it tried to steady up, but the bears on Friday just came back in and pushed it lower, and ended up round about 1635. So you know, support and resistance, I've got resistance at 1709 and 1679, and I've, you know, I've got support pretty much where it closed at the 1635. Now, if I put it on the 30-minute and look at that, then I would say I've got resistance at 1665 and 1656, with support coming in a little bit stronger, possibly around about the 1646 even. Again, you know, that's going to break out one way or the other for sure, just because of the volatility in the markets. And definitely last but not least, we're on to oil. It spent the most of the week in a sort of a $5 range between 81 and 86. And then again on Friday, dollar strength came in. You know, pretty much everyone had finished sort of assessing central bank actions for the week. We saw some fresh selling coming in. which took oil below 80. I think it just about touched 78. But you know, as I mentioned in the analysis earlier, sort of the macro bit of it, you know, it's expected that the US will start to top up their strategic reserves while it's below 80 or around 80. So, you know, I'm not saying that that's going to cushion it or stop it going lower, but you know, in my mind, it could hold it there for a little bit longer. You know, whether it finds some support there and then drops again, I don't know. Or you know, whether it's just going to keep going down, or whether it's going to have another bounce back up to the 85, 86. You know, that's part of the fun of trading oil. It's one of my favourite products, although I tend to trade it much more with strategies, you know, calendar spreads and such like. Again, if you've got any interest in learning any of this stuff that you don't know, then reach out to us because we're happy to help you. So finally, on the 30-minute, I've got resistance at 82.32 and 80.12, and support at 79.02 and 77.59. So I hope you've enjoyed sort of macro outlook that I've done and the analysis, a little bit about our services and what we do. Just as a reminder, we do a daily newsletter which includes all the global news, my views, fresh daily chart levels, fresh daily pivot points. So sign up for it. You know, you get a free trial, and it's really not expensive. You know, a monthly fee is £35 after your free trial's over. You know, you can't even get a coffee every couple of days for that. Workshops, we do one-day workshops which help you sort of fill in any gaps that you've got with your trading. We do 1 week intensive courses to really sort of start your career rather, in a really solid way. You know, we do some theory, we do practice, we really start to give you those solid foundations. And then if you want those really solid foundations and going much deeper into everything, then we've got our accredited masterclass. And of course, you know, that could even lead to a job offer from us. Now, if you have any interest in them, then just reach out to the emails at the bottom and we will get back to you. We also do trader mentoring. So if there's any areas, and we do that an hour, half day, full day, etc. Or if you're doing one of these trading competitions, even, you know, to try and get a funded account, we can help you with that. We can help prepare you by giving you some good advice and showing you maybe a few things to help you set you on your way and hopefully to pass those challenges. We do consulting to companies, helping them obviously to hedge their risks that they've got in these markets. And we provide trader education to exchanges, to brokers, and of course, hundreds of individuals. To contact us, info@symaxfintech.com, or if you've got anything that you would like to direct straight to me, then it's chris.tubby@symax-int.com. Thanks for watching and really look forward to seeing you next week. Have a great week trading. Bye for now.